Hi, welcome back. This session is going to be a fairly personal one because I'm going to talk about something that I became aware of a few weeks ago that I would say both troubles me and evokes my curiosity. A few weeks ago, I started hearing from people, many of whom had been reading my blog or used my website, telling me that they were being hit with Instagram messages supposedly from me, soliciting them to start investing in a club where I was supposed to be the advisor. Now that's weird because I don't have an Instagram account. I contacted Meta to try to get it off. A couple of weeks after that, I started getting messages about a video that's floating around, primarily in the Middle East, but looks like all over the world, where again, I'm promising people that I can pick stocks and I can deliver 60 to 80% returns. Now, I'm convinced that anybody who's been reading my posts, reading my books, watching my classes, any of the students in my classes, I'm pretty convinced that they would not have fallen for the scam, but there must be some people who are falling for the scam because it continues. So what I thought I would do is think about what emotions this evoked in me. My initial emotion was surprise. Why would somebody invest with me just based on my name? I'm not a billionaire. I don't run a hedge fund, but there must be a reason. Followed by anger that, vulnerable investors were being targeted. And finally, frustration of the social media platforms that seem to want to do nothing to take them offline. As a teacher, though, the overwhelming emotion was curiosity. I wanted to see what the AI scam was doing. And thinking of it as a teacher, I wanted to say, what was it doing well? What was it doing badly? What was it breaking down on? In other words, I wanted to grade it like I would in a homework assignment from a student in my class. So that's what I plan to do. I want to first talk about what makes it so easy for AI to target me. And then I want to talk about what I do that might not be easy to target. And then I want to talk about my grading of this particular scam. And in the process, perhaps I can lay out some actions you can take to protect yourself against future scams, not just of me, but of other people. Last year, I wrote about a bot called the Demodron bot. It's developed by Vasundar, who teaches at NYU. It's a bot that I'm well aware of, that I've I've authorized to kind of use my material. And I talked about that bot and how I'd made life easy for AI entities in general by leaving all my content online. And that's not the only bot out there. There's a second bot that I'm aware of that I've authorized that does appraisals, where I've essentially, I know the people who are developing it. I've allowed them to take my data, my spreadsheets, my approaches, and build it into the bot. There are at least 3 other unofficial bots that I know are out there that I have not authorized that are doing whatever they're doing, and there's not much I can do. So I'm going to start by giving you my rationale for why I put all my material online. And you've heard this before. And then give you the links where you can go get the material yourself. This way, if you ever get a bot reaching out to you, telling you that, hey, I can give you access to Demodron's data, it's available for free. So let me talk a little bit about my open access policy. I'm a teacher. And as a teacher, I want the biggest audience, especially of enthusiastic students that I can get. When I first started teaching at NYU, I taught in a classroom, and my classroom was restricted to whoever could be in that room. But my first attempt at expanding beyond the classroom was actually fairly primitive. I set up a video recorder at the back of the room, and I recorded a VHS tape. I know whether some of you might be too young to have seen these tapes, but I made 3 copies, put it in the NYU library, and allowed people to check it out and watch the class. The internet, for all its sins, though, opened up the entire world for me. Because initially, it took a lot of work to take those video lectures, convert them to online classes, poor quality and tough to reach people. But over the last 20 years, that process has taken a quantum leap. Spring of 2025, when I taught my classes, the classes are automatically recorded because there are cameras every classroom. And a few minutes after the class was done, they were converted into online videos because I could put on YouTube. And I'll talk more about that for anybody anywhere in the world to watch. And as the internet has expanded its reach, I've also put the rest of my material in places where people can download it and see it. And for the most part, it's fairly accessible. In fact, I'm going to give you the 4 places where almost everything I do, I put online. There are no secret sauces I hold back, nothing that's on my computer. Not. The first is my webpage. I don't even remember when I started my webpage, but if you take a look at the webpage, it shows its age. It looks like it was developed decades ago, and you know what? It was developed decades ago. And I'll come back and talk about why I've left it the way it is, but essentially it is the receptacle for almost everything that I do. Let's start with teaching. I teach 2 classes at NYU, a valuation class and a corporate finance class. The valuation class, I teach the MBAs and the undergraduates. Those classes I record, and you can get to them through my webpage. You can get to the classes, you can get to the material, you can get to the exams, you can essentially take the class online. You can also find 4 other classes I've developed that I don't teach at Stern but are on my webpage. One is a lead into valuation accounting class, just enough accounting so that you can do valuation and nothing more. A made for finance statistics class, a class on investment philosophies, basically different ways of thinking about investing, and one on corporate life cycles. And all of those are also available on my webpage. So that's the first place you can check is everything I teach is, and they're all accessible, they're all free. And when you go to the class, not only can you watch the class, you can also download the material, the slides, the exams, the quizzes, everything that goes with the class. The second stop on my webpage is data. At the start of every year for 3 decades, I've taken public company data and summarized the data in terms of industry averages. I do it for myself because I need the data for my valuations, my corporate finance for the rest of the year. And since I already had the data, I saw no harm in sharing it with the rest of the world. So if you go to my webpage, you can see my most recent data. I update only once a year. I'm not a data service. So at the start of 2025, you'll see about 50 data sets representing industry averages on margins, on risk, on profitability, basically on everything you might be interested in finance. You can also get the archive data from previous years. It's not the easiest web page to navigate, and I apologize for it, but it's all there. My raw data comes from a variety of sources, and because I am grateful to them for my data, I try not to step on their toes by giving you company-specific data. So if you want data on a specific company, you won't find it on my webpage, but you can find 100 other places for free. I break my industry averages regionally. I have US, Europe, emerging markets, Japan, and I do China and India separately, and Australia, Canada, and New Zealand as a region. The third place you can stop on my webpage is my spreadsheet page. And I'm not an Excel ninja. My spreadsheets are primitive. I don't do macros. And if you're an Excel ninja, you're probably going to look at these websites. Who designed these web pages? But they work for me. I share my web page, my spreadsheets, and my most downloaded spreadsheet is the one that I use to value companies. And you can get it, and you can get a webcast that explains its usage. There's a tools podcast that I also do on how to read an annual report, how to get macro data, stuff that you might need in the course of doing financial analysis. And staying on my webpage, I do a lot of writing. And I have 11 books, and one book that I quoted with Peter Bernstein a long time ago. They cover the spectrum, corporate finance, valuation, investing, and you will find them all listed on my webpage. And not just listed. You will find web pages that go with each book that contain every example in that book and supporting material for the book. In fact, this is the only section of my web page where there might be a gatekeeper and you might be asked for a password, but it's only for the spread. It's not for any of the material you will need. It's for slides, PowerPoint slides. The PDF versions you can download. The PowerPoint slides are instructor material. If you're an instructor and need them, I freely hand them out. So the last place on my webpage you might visit is papers. And these are not academic papers. Now, I'm often accused of being an academic, which I found a little confounding because I'm not a very good one. If there were an academic fraternity, I'd have been shunned. But these are papers that I write for practitioners. In fact, my two most widely downloaded papers are updates I do every year on the equity risk premium and the country risk premium. In fact, my country risk premium update came out last week. You probably, if you get a chance, you might watch that session as well. So that's my webpage. It contains the bulk of what I do. The second place where I post is my blog, and I'll be quite honest. When I wrote my first blog post on September 17th of 2008, it was about a week into one of the worst financial crises the Western markets, that developed markets had ever seen. And I didn't even have an idea what a blog was, why I was writing on it, and how long it would last. I wrote that post because I had questions and I didn't have answers. I was facing uncertainty, and that's become what I use my blog for, is to write about things that I have questions about, that I don't have answers about. It's become almost my therapy place. I go there to post on things where I'm trying to work things through in my mind. My original blog was on Google, but since then, in the last couple of years, I've reproduced the blog post on Substack. You do need to be a subscriber, but it is free for my Substack, and on LinkedIn, because I hit a different market there. If you are in LinkedIn, you're welcome to follow me. If you reach out to me for connections, I apologize in advance. I hit my connection limit. I didn't even know there was a limit till I hit it. So if I don't accept it, it's not because I don't like you. The third place where you will find my material is on YouTube, and much as YouTube get abused, I am grateful to it, because that's where my videos go. All of my classes you can find there. So I have hundreds and hundreds of videos. I've tried to organize them by playlists. So if you want to watch a class, take a playlist, watch sequentially through the class. But I also, in the last 7 or 8 or 9 years, I've taken my blog posts and converted them into videos which show up on YouTube. Why? Because some people, I think, prefer to watch a video than read. It's the same material in a different format. There's a final platform, and you're going to be pissed off at me for even listing this. It's just Twitter. I started on Twitter in April of 2009. I know some of you have very strong views on Twitter. I use Twitter as a bulletin board to tell people that I posted a paper or finished a book, because I discovered it's the easiest way to get to people quickly. Outside of these alert posts, I hardly ever post on Twitter. I don't post my views. I don't debate people, because I've discovered a version of Gresham's law seems to kick in, where in a conversation, if you have a debate on Twitter, the worst and least informed posters tend to dominate the debate and take it over. So I prefer not to go there. Everything I do is on one of those 4 places. Now, as you look through my content, there are a few commonalities you will discover. One is decidedly low tech. As I told you, my website looks like it was designed 20 years ago, and it was. My blog is still on Google. It's not, I've never kind of updated the blog. My YouTube videos are shot in my office in front of my computer. There's no professional studio. My dog is often in the background. There's noise from the outside. Almost everything I do is low tech. And every week people reach out to me, and they reach out in the best of intentions. I'll update your website. I'll do great things for you on YouTube. I'll write a better descriptions. You can make shorter videos. There'll be more people. And I always turn them down, not because I'm ungrateful, but I think in a strange way, being low tech has acted as a barrier to entry for some people who should not be reading my blogs, because it's not for them, because I am verbose and they want short, punchy pieces. So it's kept people away who probably would get pissed off at me if they were there. I'm also a teacher, and I value process over product. You'd be surprised the number of times after I wrote a post where people write to me and say, so 7-page post, but what's the bottom line? Should I buy or should I sell? Is the market overvalued or undervalued? That's not my game. I prefer to talk about how I think through problems and come to an answer rather than give you the answer. The old saying about teaching a person how to fish being more productive than giving them fish applies there. But I value process, and shows up in every one of my in all the content I produce. I'm a pragmatist. I told you I was a terrible academic. This is part of the reason. I value companies. I do corporate financial analysis on real companies. I don't have time for pure theory. I break the rules, I bend the rules, I make assumptions, make a purist blanch, but I want to get practice. I'd never give out stock picks. It's a strange thing to say, right? You value stocks, don't you have to act on them? Absolutely, and I do. And I tell you after I value the stock, whether I will buy the stock or sell the stock. But I'm not going to ask you to do it because that cuts against the grain of everything I think about investing. I will give you my story and my spreadsheet, and you can take it and make it your own. And because I think in investing, claiming ownership of your actions is a key part to being a good investor. And finally, almost nothing on my site should cost you money. It's free both in terms of what you pay and how you access. There's no subscription needed. And I know I get lots of compliments on this for my altruism, but it's completely selfish. There are two reasons I do it. One is I'm incredibly lazy. The minute you start to monetize platforms, there are hoops you have to jump through. I don't want to do that. The other is, if there's anything that outrages me, it is consultants, bankers, financial analysts who state the obvious, claim absurd things about what they're stating, and charge outrageous amounts to customers. And if I can save you that money, I consider that a win. So those are my commonalities, which already should give you a way of detecting a scam in my name. If a scam is driven by, hey, send me $1,000 or become a subscriber, it's probably a scam. There's one exception to this though. Every few months you will see me talk about my NYU certificate class, which is a paid class, or when I teach in another part of the world. Like I will be teaching in India on September 4th and 5th for the Economic Times. I let people know. I know those services, NYU charges you money, the Economic Times will charge you money. But I feel it's the least I can do for the fact that NYU allows me to share my content for free, and for the fact that I have people who manage the logistics in whatever part of the world I show up in. Which leads me to the imitation game. This is the first time there have been fakes and scams around my name. Much of it, though, I categorize it as good neighbor sharing, which is just as you would lend a neighbor a cooking ingredient, they don't have to save them a trip to the grocery store. I'm okay with people borrowing my material, a spreadsheet, a slide, something I've written, if it makes their life easier. If they can acknowledge me, great. If they don't, not a big deal. There are less benign versions where people take data from my site to back up arguments. They selectively use data. They misread or misinterpret what I've said. And they reproduce large portions of my writing without acknowledgement. I think that's, that's not right. And I try to make them aware of it and I nudge it. But, if they don't respond, I kind of let it go. And the most malignant versions are scams where people try to make money. And there I try to let people know, but the fact is my reach is not large enough to stop everybody from being aware. But most of these scams historically have been so badly designed that they collapse under their own contradictions. And here's where I think AI is up the ante. This is the Facebook page that people had sent me saying, this is the fake, and it is a fake. That's me, definitely. They pulled a picture. It looks pretty professionally done. And the words that you see below actually sound like words I would use. In fact, I think as I look at this ad and I try to grade it, there are a couple of things. One is the picture is right. The words sound like my words. The language is right. They talk about NVIDIA and Palantir, two companies that I've talked about in the past. So it sounds and looks like me. So if I were grading just looks like, sounds like, it's an A-. You're saying why minus? It's a little too polished for me. If I created something like that, it would not have that degree of polish. What the scam struggles with is content. It talks about NVIDIA and Palantir. It talks about their valuation, but there's no substance. I don't think I do that. Maybe I do, but point it out when I do. I tend, when I talk about valuation, to give you my story and my valuation for a company. Now, if I wanted to tell you Palantir is overvalued, you'd see my story for Palantir with two channels, one for the defense business, one for it's a fascinating company. There's a story there. You would see my spreadsheet with my inputs, wrong as they might be, and you'd see my value, not just in the abstract, but an actual number. So this post doesn't have any tangible backing for value, just talks about it. And from that perspective, it's a C minus because the companies were picked right, but there is no substance to back it up. Incidentally, if the deodorant bot I talked about, the officially sanctioned one, had done this, it would have done a pretty good job of actually creating a plausible story with evaluation. So this was an opportunity lost by the scammer. What does the scam get wrong? I think it gets me wrong, and I might be biased in saying this. It's, the scam pushes people to join an investment club. No, I am not that kind of person. I mean, I take the Groucho Marx view of the word, where any club that would have me, I don't want to be a member of. The notion of telling people which stocks to buy cuts against every grain of my being. Second, is a part of the scam, I think, especially in the video part, where I promise people that if they follow me, they can generate returns for 60, 70, or 80%. Come on. You know what I think about active investing, that most active investors struggle to beat the market, and even those that do, beat it by small amounts. I mean, Warren Buffett has beaten the market over 30 years by 7, 8% a year. That is a massive amount. I'd be a fool to go around promising 60% return. So in terms of delivering a message that's consistent with who I am, it's F. It gets the tone wrong, the stock picks, the solicitation. So as I said, I hope you did not fall for the scam. But the truth is, and I thought long and hard about writing this about doing the session, because the people who read my work and watch my sessions probably didn't fall for the scam. You know who falls for the scam? Somebody who doesn't read what I do. So I'm not even reaching them. So why bother? Because I want to talk about a protective shield that you can develop for other scams that you might fall for. First, looks and sounds like is no longer good enough. AI can do that. So just because a video looks like Warren Buffett speaking doesn't mean it's Warren Buffett speaking. It's too weak a test. I've always argued that there's no such thing as smart money. There's money that thinks that it's smart. In fact, most money that thinks it's smart, hedge funds, private equity, is lucky. And even if it's smart and beats the market, it doesn't last. So if you want to steer away from arrogance and hype, it already protects you against a lot of AI scammers who will promise the moon to you, who will have arrogance and hype driving the scam. Third, you need to do your homework. If you're going to invest with somebody, you need to understand how they think. And that's why I've tried to give you at least a window into my thinking. And you need to do the same thing with anybody else that you think about investing in. And that goes beyond asking for, hey, what's your track record? What have you made over the last 10 years? If you get a chance, watch my class on investment philosophies, because in my view, successful investors, the one thing they share is a way of thinking about markets. It might have very different ways of thinking about, but each of them has a unique philosophy that they've thought through. And you need to understand that philosophy. And if you do, you're well protected against scams in that person's name. And finally, I would like you to avoid ROMO and FOMO. You're saying, what are you talking about? ROMO is regret over missing out. Regret that you did not buy Facebook at its IPO in 2012. Regret that you sold the Bitcoin you owned in 2013 when it hit 1,000. You're saying, what's wrong with that? It gives rise to two emotions. First is jealousy at the people who actually bought Facebook at the IPO or held on to their Bitcoin to see 6-digit prices. And then you start falling for conspiracy theories where you believe those winners won because they fixed the game. That's regret over missing out. Regret is a dangerous emotion. The second is fear of missing out, where you worry about missing the next big thing, the next multi-bagger, the next stock that's going to go up 500% or 1,000%. The emotion that triggers is greed, and that's never good. You're going to overreach in your investing. You're going to never have patience with investments because none of them are going to measure up to your expectations. And you keep looking for the next big thing, and guess what? You're a perfect target for scammers. Which brings me to my final point on scamming. We think of scammers as the villains and the scammed as the victims. I think that's too easy. Because a scam is like a tango. You need both sides for the dance to work. The scammers, of course, have to come up with the scam, but the scammed have to bring greed and fear into the game. Most people who are scammed are not stupid. They just get greedy, and once you get greedy, you stop asking questions. I know you're saying, what about the regulators? Won't they protect us? Looking to the regulators of the government for protection will do little for you. It'll offer you false comfort. The best defense that you have against scams is caveat emptor, buyer beware. Ask that question, cui bono, who benefits, and follow through. And if you can do that, I think you'll be well protected. I am sorry again for the scams in my name. I wish I could make them go away. But I'm numb. Social media is social media, and it's out of my control. Thank you very much for listening, and I hope you have a wonderful day.